Clive, thank you very much for joining us today. How are things in Geneva?
Hello, James. Well, thank you very much for having us back. It's a great pleasure. Well, the Swiss franc just keeps going up and up and up. It makes Switzerland more and more expensive for those people who are arriving. But of course, plenty of people would like to come here and live here because you can earn a much higher, a qualified secretary will probably get more than a bank manager somewhere else in Europe, or certainly in some countries. So we've got strong demand for people to get in, but there's nowhere for them to live. All the accommodation is completely chock-a-block, and it's very very expensive. So we kind of got this problem with the everyone wants to live here, and they're allowed to because it's under the EFTA rules and European Union rules, which Switzerland's not part of, but we have to join in with that. They can come, but they can't find anywhere to live. So there's the dilemma for people who'd like to get these high salaries in Switzerland.
Yes, I was there recently. I flew into Geneva, rented a car, and drove all the way to Zurich. Stopped in at a half a dozen places in between, and it's just an amazing country. I can't say enough about it. And I always forget that they have their own currency because I brought euros with me, thinking I could use them, and nobody wanted them.
Well, I'm surprised at that. Most people places should take euros. They'll probably give you. I mean, in the old days, they used to give you 1 to 1 against the Swiss franc because the euro was worth more than the Swiss franc. So we used to have an exchange rate of 120. That was about 2015 when there was a peg to the euro. And so if a Swiss person took a euro on 1 to 1, they were making a 20% profit almost immediately. But of course, now the euro is worth a lot less than the Swiss franc. So nobody's going to take your euros anymore. They're going down.
So we got to talk about gold, seeing how Switzerland is like one of the gold capitals of the world, and it's having an amazing year. It's finally catching a bid here. It was up 25% in 2024. It's up over 50% now in 2025, and we still have a few months to go in the year. What are your thoughts on gold here, and does it keep going?
Well, first of all, it surprised an awful lot of people who made predictions a year ago. I was just going through my LinkedIn posts from about a year and a half ago, and I came across a post I'd done on gold, and I said the post went like this. It looks like gold is about to go through $2,000, and if it does so, that'll be very bullish. And of course, it has done. And now we've seen projection after projection from all the major banks, always forecasting a price of $200 or $100 higher than the present price. So we're starting to see banks now come out and forecast a price of $4,000. And we could potentially get there very, very quickly. I mean, I don't know. We might even be there by the time this comes out. So what do I see happening to the price of gold? Long term, I think it's destined to go much higher. Um, these things never go in straight lines, but we seem to have gone in a straight line for a long time. So it would not surprise me if we have a bad day, week, month, but not a year, I don't think. Um, we're in a very unusual situation, one which we have never seen before, and that is one where dollar holders don't know what to expect tomorrow. If we go back a few years ago, you could be fairly sure that if you had a dollar receipt coming in, you knew roughly where it would be 6 months from now or a year from now. You trusted it. Now people are saying, I can't tell what's going to happen tomorrow. There's, tariffs and surprises and political agendas going on, and it's all over. So although the dollar isn't really moving, there's this general feeling of uncertainty, and people are saying, you know what? They weaponize the dollar. There's this going on. There's that going on. I'm not sure I can keep everything in dollars anymore. And so part of it's moving into this safe haven. I mean, they're looking around for safe havens, and you can't call Nvidia a safe haven anymore. So I think some of the money which is looking for that lower volatility, that greater degree of safety, is heading into gold because people are saying, well, I don't know about the dollar, but I'm pretty damn sure my gold will still be there next year. I'm pretty sure it will buy something. And I think there's that certainty which is driving gold higher. On top of that, we've got the central banks. They're not buying as much as they were a year ago, but they're still steady buyers of gold. And to a smaller extent, we've got the public starting to come in and buy into the gold ETFs, where the number of tons in the ETFs have been starting to rise. It's not spectacular, I would say. But there's been a sort of little bit of a trend change from the public, the man in the street, who's starting to say maybe I should have a little bit of gold just because I can't have it all in Nvidia.
Yes, and you raise a very interesting point there because I recall back in January, February, Newmont, which is the largest gold producer in the world, they produce over 6 million ounces a year, one of the worst run companies also in that sector. It was actually down on the year, okay, back in Q1. Here we are closing in on the end of the year. It's up 125%. It's the second best performing stock in the S&P. It's the only gold name in the S&P, but it's up 125%. The number one performing stock, I believe it's Palantir. But it's just not Newmont. Barrick is up over 100% finally. That was another big laggard. Agnico's up over 100%. Many stocks are up 200%. So maybe you can tell us about some of your favorite gold equities.
So, first of all, as a generality, the price earnings multiples of these gold mining stocks are pretty reasonable. There's plenty around which are earnings multiples around 10 or low teens. And when you compare that with the rest of the stock market at 25 times, it's relatively cheap. So, despite the rises, they're still not expensive in general. And the other point about all gold mining and silver mining stocks is that the profits are set to grow very rapidly. Why is that? It's because the gold price has risen, but it takes time before a rise in the gold price makes its way through to the bottom line profits. Because a lot of these gold mining companies will have sold the gold that they dug out of the ground this year at last year's prices because they'll have done some forward sales. But as time marches on, the current prices will start to factor into the price at which they're selling the gold, and their profit will be rising. So if we're on a price earnings ratio for a typical company of 10 or 12 times now, it's quite likely that next year that very same company will be on a price earnings ratio of 6. Now, if you take a company which is fast growing, which it will be next year, they all will be, they'll be fast growing because of the higher profits, they shouldn't be on low price earnings ratios. So I think what we're going to get with gold mining companies is the double whammy of, first of all, more profits pushing up the share price, but secondly, because they are now showing a track record of growth in their sales and their earnings, we'll be seeing higher multiples applied. So investors normally apply a higher price earnings multiple to something which is growing. There's all kinds of algorithms out there which do the maths for you. But if something's growing at 10% a year, it's likely to have a higher price earnings ratio than something growing at 1% a year. And so these gold mining companies are likely to be growing at 40 or many of them 40 or 50% a year by this time next year in terms of earnings per share. So I'm expecting not only the share prices to be higher than they are now due to the higher earnings, but also higher due to the higher multiple. So you've got this double whammy being applied. And I think a lot of people have woken up to that. That explains the amazing rise we've seen in gold mining shares in general, but they're still not expensive compared with what we've got coming down the line. In terms of companies I like, now obviously I want to say these are not investment recommendations. But I can mention one as an example. It's McEwen Inc., run by Rob McEwen. He's the guy who took, I think it was Gold Corp, or was it Gold Fields? I can't remember. But he took it from something like a 50 million company to an $8 billion company. Now, the special feature about that company, by the way, it's a gold and silver mining company. And it's on a reasonably low price earnings ratio based on the projected earnings for the current year. But the interesting feature about it is they also own a huge or share of a huge copper company. It's called McEwen Copper, actually, which has got a lot of copper in Argentina, and it's just likely in the next month or so to get the feasibility study completed. And that would be the catalyst to push the share price a lot higher. Now, Rob McEwen is a serial entrepreneur who, in respect of this particular company, is taking $1 a year as a salary and has a huge stake in the company. So his interest is completely aligned with the shareholders' interest. As far as the subsidiary company, the I think it's 47% of McEwen Copper they own. So they've got so McEwen Inc. owns 47% of McEwen Copper. I think that's the number. I might have got it wrong. There are some other significant shareholders in McEwen Copper, such as Stellantis, which is the Netherlands-based car manufacturer. And you might say, well, what's a car manufacturer doing investing in a copper mining company? Well, they've done their work. They believe the copper's there, and they're securing for themselves a long-term supply of copper, which is going to be used a lot more in cars going down the in motor cars going down the road due to electrification and so forth. So I think this is quite an interesting company because it's benefiting at the moment from the higher gold and silver price, but down the line we're going to have a lot more copper usage on the planet, and just as this copper starts to come on stream, we'll probably be I think we'll be seeing a higher copper price too. So I kind of like that one quite a lot, and it's the forecast gold and silver to come out of this McEwen Inc. is set to rise rapidly. So that's quite a good one. Another one which I like is in Australia. It's called Ramelius Resources. They recently made a fantastic purchase of a company called Spartan. Now, Spartan has huge resources of gold, but they didn't have any money to dig it up. And Ramelius Resources has, both before and after the acquisition, a lot of net cash in the bank. And they say that they're going to start digging this gold up. And they reckon that by 2030, this is the company's own projections, and I can't give you the number because they gave it, but they did give it. It's going to be a huge increase in the number of ounces of gold coming out of the ground compared with today. So again, I want to say these are not investment recommendations. They're things I have bought myself because I believe that the amount of gold coming out of the ground will go up. I believe that the gold price will be higher, and I believe that the profit on what they dig up is going to be, because of the higher gold price, that much higher. So, and but all of these are reasonable multiples.
Those are both new names for me, so I'm going to have to do some work on them. But one thing I was thinking about when I mentioned that Newmont's up 125% on the year, that tells me the generalist is coming back to the marketplace because a lot of people don't know anything about the gold market. They don't know anything about gold mining. So they say, okay, Newmont's in the S&P, I'm going to buy that one. And so we know the generalists are coming back into the market, but what about other investors, retail investors, et cetera? Like if they're not involved in the market yet and they think, okay, gold's up 50% of the year, it's at $4,000, I can't bring myself to buy it, or it's gone too far too fast. Do you think there's still lots of time for people to step into the gold market, whether they buy the physical or they buy gold equities, or is it too late?
There's an awful lot of people who wish they bought at last week's price or last month's price. So what we've seen recently is every time there's a short-term pullback of a day or two in the gold price or the gold mining stocks, the next day, almost the next day, there's surges of buyers coming in and pushing it back to the previous price and higher. So there's a lot of people waiting for that dip, and that means that when there are these dips, not going to go far because everyone's trying to second guess when they go in, and they want to be before everybody else. And the minute it starts going back up again, they say, "Quick, I better get in before it moves." And then there's this race as people leapfrog each other, putting their bids in to try and buy the share price. The other thing for people who don't know what they're doing really, there's the gold mining exchange traded funds. Now, an exchange traded fund is a fund which holds hundreds of or so tens of investments, maybe 40 or 50 investments in a particular sector. So the one which most people can look at is known as the Van Eck Gold Miners Index. Its symbol is GDX, letter G for golf, D for Delta, and X for X-ray. So GDX basically will trade at the net asset value of those underlying 40 or 50 shares which are held by it. It's a very, very large fund. It's in the billions. So when you buy the GDX, you're getting exposure to a basket of 40 or 50 stocks, which will move in line with the average of the gold mining stocks up and down. So that's a very interesting one to get into because you don't have to think about this one, is this gold mining company better than that one? But of course, there is an effect when people put money into the GDX. The GDX has to buy everything in the underlying index. So the good and the bad all get pushed up on a rising tide by the purchasers of ETFs like the GDX. But I think that's a very safe way to get in because you're not exposed to the specific risks of a single company. We mustn't forget that gold mining is a very risky business for most gold miners. They have the risks of cave-ins, landslides, mud flows. There's obviously in many countries industrial action. There's electricity shortages in South Africa, maybe for example. There's political risks in lots of countries because most of these gold and silver miners they're not in nice, safe Australia or Canada or North America. They're in places like Africa or Peru or Mexico, where the politics are not at all the same, and you never know. So if you're into an exchange traded fund, you own a bit of everything, and you've got gold mines all around the world, and some of them will go bad because of politics or because of some disaster somewhere, but collectively they should do very well.
You raise a very interesting point there. Jurisdiction, when it comes to mining, that's my number one criteria. Like I want to be in Canada or the US or Australia, and therefore, they respect the rule of law and I don't have to worry about their assets being nationalized. One of the names I like is Agnico. 75% of the gold production comes out of Canada, so I don't have to worry about them losing their assets. So if I speak to you in 1 year from now, let's just say Q4 of 2026, where do you think the gold price is going to be? I'm putting you on the spot now.
Well, it's been going up much faster than I expected. Um, and I think that continues at a similar pace. So we could easily add another $1,000 in the course of the next 18 months, I think, which would push us almost to 5,000. And I'm not excluding the possibility it might go a lot faster than that. There's a whole bunch of things which might happen between now and then, which might push the gold price up to, well, I'm going to say but could go much higher. We might even see, and I don't think it's a likely probability in the next 18 months, but it's a possibility. We might even see some sort of currency crisis where there's a panic about a particular currency, and it doesn't matter which one it is, whether it's the yen, the pound, or the dollar. If we get a currency crisis and people start to say, "Oh my God, this currency, I don't want it," and that everyone's rushing down to the shops, it can spiral across borders very quickly. So let's say the Japanese yen were to fail, as an example, everyone in every other country is going to say, "What if we're next?" And what do you do? What do you do if you fear you're going to be next? You take the money you've got and try and get something else, but suddenly you find nobody wants to take your money.
Yes, very good points. One other thing I should touch on, you did touch on this, but the margins associated with these gold producers now. So with inflation, the government's telling us inflation's under control. I don't believe them, but anyhow, it did peak in 2022 at 9%. And it's been coming down ever since then. So we did have problems with inflation within the mining sector back in 22, 23, even the early part of 24. But it seems like it's under control now. The price of oil is really helping because that's one of the largest inputs into a mining company. So the oil's hanging around 65 bucks a barrel, give or take. So that's having a big impact. So providing oil stays here, these margins are just going to keep exploding, right? Like it's just going to,
Yeah.
and that's
I
going
mean,
to, well.
in any case, when I do my maths on a gold mining company, and I perhaps talk about how your viewers can value a gold mining company, um, I'm assuming a rather bearish case for inflation. I'm assuming that the cost of gold mining will rise by about 10% a year. Now, that's probably overly pessimistic, but perhaps just to help everybody who's looking at whether they should buy an individual gold mining company, I'm going to tell your viewers how to do the maths. And even if you're not much of a not much good at maths, we have a wonderful thing these days called ChatGPT, which will do it for you. So, but I'll tell you how to do it. Then I'll just tell you the faster way via ChatGPT. So, what you want to know is for any particular gold mining company, what the cost of production of the gold is. That's called the all-in sustaining cost, or AISC, right? And you know what price they should be selling it at. They should be selling it at the spot price. There may be a lag here, but they should be selling. So the difference between the two figures tells you how much profit per ounce they are making. Now, the next question is, how many ounces of gold are they producing? And if you go to the company, so when you look at the company's website and look at their annual report and accounts or the last report, every gold mining company tells you how many ounces they produce. They might say gold equivalent ounces, GEO, gold equivalent ounces, because sometimes they translate silver into gold at a certain ratio, or they translate gold into silver. So they call it gold equivalent ounces. So you know how many ounces they produce. You know what the profit is. That's the gross profit of what they're selling it for. You're taking today's price minus what the all-in sustaining cost is. So you now you've got the gross profit, but you also can see in the accounts all the other expenses they've got, because they've got lots of other expenses like taxes, like prospecting, like management overheads, and so forth. So you have to knock that figure off. And by doing that, you can forecast what the profit would be if the gold price stays where it is today. So you now have the net profit. You can now take that net profit and divide it by the number of shares in existence, which is also in the company accounts, and you know the earnings per share. Now you can compare that number, that earnings per share number, with what was last reported to see, first of all, how fast it's growing its earnings per share. But secondly, you can apply a multiple to the earnings per share of 10 times or 15 times the market. That's called the price earnings ratio. So you apply whatever price earnings ratio you think is appropriate, but I usually take 10 to 15 times and see where the share price ought to be if next year's profits are where the gold are based on the gold price today. Now, if you think the gold price is going up, you could take a higher number. So I quite often look forward to 2027 and take a number of $5,000 an ounce for 2027 as an average price and work out what the profits will be, gross, knock off the other expenses, then divide by the net result, divide it by the number of shares to get the earnings per share, and then I multiply that result by, say, 10 or 15 times to get where I think the share price will be. And in almost every case, I get to a share price which is much higher, many multiples of today's price, anything from 2.5 times to 8 times, 10 times sometimes today's share price, which tells me that we've got a lot of upside left. Now, I've just told you, I've probably lost a lot of people with what I explained. So I'm going to tell you the easy way to do this. What you do, and I have the paid version of ChatGPT, it's $20 a month, but it'll work with, probably work with the unpaid version. But ChatGPT can do an awful lot of things it couldn't do 3 months ago. It can actually go and look at websites and work numbers out. So all you have to do is say, go to the website of this company, you name the company, look at all the papers you can find, the annual report and accounts, the earnings calls, the quarterly results, and tell me how much money you think it will be making in 2027 based on a gold price of $5,000, for example, and based on an earnings price earnings ratio of 10 times. And it will tell you, and it will do it for you. It'll give you investment advice, and it will tell you what it thinks the share price will be. Then all you have to do is look at the share price and compare it with today's price and say, do I like that number? And that's dead easy because you're not having to go to the website yourself and pull out papers and study them. You're just saying to ChatGPT, go and look at the website yourself, do the work, and tell me where the share price will be. And it will do it for you now. It's amazing how far we've come. You couldn't have done that 3 months ago. And of course, ChatGPT is not the only one which will do that. Grok is GROK, will do it very well. And if you really want to get sophisticated and pay a little bit more money, there's Manus, Manus AI, which is really good at doing that sort of thing as well.
Yes, great insights. I spend a lot of time on chat. Oh man, like continuously throughout the day. I'm spending a lot of time on there. It's providing so much information and it does it so damn fast. All right, so you're bullish on gold, which is great to see, as am I. What about silver now? It's up 60% on the year. It's not making new all-time highs like gold is, but it's damn close. What are your views on silver?
Well, first of all, I think we're going past the all-time high over time. I don't think that time is particularly long. We do know from looking at the Silver Institute's numbers that the mined supply of silver is considerably less than the industrial use, and that has been the case for about 3 or 4 years. And that explains why the silver price has been going higher, because the only way you can get the silver you need to meet the demand is by recycling. So get recycled silver, you have to have a higher price so that your granny brings in her candlesticks to the pawn shop, and some investor says, "I've got this bunch of bars or coins I bought 5 years ago. I've got a nice profit," and they take it along to a gold and silver shop. I don't know if where it is everywhere in the world, but here in Switzerland, we've got places all over the place say, "We buy gold, we buy silver." So people take their stuff down, hand it over, and get the money because they like the silver price. And the higher the price goes, the more it will get people out. So that explains why the silver prices had to go higher to suck out this silver for recycling. Um, and I think the silver demand continues to rise for well, I suppose, well, but one main reason, but it's two reasons related, in fact. The first and main reason is we're not the main usage of silver is in the electronics industry. We are not going to have less electronics in the future than we have today. We've just seen very recently the US, I don't know, I think it's the government, anyway, some US agency, which is part of the government, say that silver is now going to be a strategic mineral for the United States, because they used to have a strategic stockpile of silver, which was used by the military, because it's used a lot by military. That's completely gone. Now they've decided it should be a strategic mineral, which means that they should start to build a stockpile again, because and they specifically say what the risk is. The risk is we might not be able to get silver out of Mexico. So if they suddenly can't buy all the, because that's where most of the silver, a lot of silver comes from. If they can't get silver from Mexico because of maybe some political problem or internal industrial action, or maybe some civil war, or who knows what, it would be a problem for the United States because it would damage U.S. industry, it would damage the weapons industry. So I think that could be another factor, that this stockpile potentially might be rebuilt. And the trouble with that is there is no silver, because it's all consumed by industrial use. So they'd have to push the price. The price would be pushed higher if they go into the market and start buying now. If they do so, I suppose they'll do it very gently because they don't want to overpay. But that's a factor. So first of all, that's the first thing. The electronics industry in general, it's not going to go backwards, and we've got the potential stockpile. But the second thing I think we've got to say is China is trying to stimulate its economy, and the solar panel industry is likely to be getting a big push out of the Chinese government, because that's something which is easy to sell to everyone in the world. Get cheap energy, and cheap energy, they call it clean energy, clean energy. So I think we've got this non-stop push from China to make more and more solar panels which use and consume silver. And of course, the solar panel industry has been a big driver in the increase of use of silver. I think 2 years ago, we saw something like a 30% increase, or the amount of silver being used in solar panels went up by something like 30% in a year. It's not so much last year, but it's certainly increasing all the time, because even I'm going to have my solar panels put on my roof starting tomorrow. So, and I can say I'm here in Switzerland, but we've got this huge pressure from the Swiss government basically saying everybody has got to do something to reduce their power consumption by using more economic methods of heating their homes in the winter and so forth. So it's coming from a sort of every angle, a tax angle. In other words, one thing you had to do in Switzerland is, if you were using electricity, you had to report yourself to the government. I fill in a form to say I'm using electricity for heating, so they can keep an eye on you and come back by, I think the deadline is 2033. You've got to find another method before then.
Oh,
and
wow.
solar panels. I mean, you can only do what you can do, but there's two main technologies used here. One's called heat pumps, and the other one is called solar panels. So you've got to do one of the two by then.
Interesting. Okay, so you're bullish on silver. Now, many of the stocks have had massive moves, 100%, 200%. Pan American Silver, largest silver producer in the world, it's up 90%. First Majestic, another large producer, is up 120%. What silver names do you like?
Um, I'd have to have a look. Give me a second because I actually have. Da, 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 da. I wasn't prepared for that question, and I have bought a few names, and I just want to see what I bought recently. Just looking for my spreadsheet. Okay, here we go. So names I like and which I do have. I've got Silver Corp, Endeavor, Silver, Silver X, Santa Cruz Silver Mining. And then there's a few which are sort of mixed, like Perseus Mining, Andean Precious Metals, and so forth. So to home in on one, um, I actually did a very extensive research of all the stocks which were in the SIL, that's the Silver Mining ETF, and the ones I chose were the ones I just mentioned. Just give me a second. I'm just going to check those for you. Uh, so yeah, so Global X Silver Miners was one of mine. That's quoted in the USA. Fresnillo in the UK. I don't know if you know that company. I bought that one. That's Fresnillo PLC. I think they mine in Mexico. Um, Sorry, ignore the Silver X. I did buy it, but then I changed my mind on it, so that's not one I would buy anymore. Then I bought Silver Metals Inc. That's quoted in New York. I said Endeavour Silver. I think I bought that. That was a good one. So I can't really tell you more about them individually because there were so many of them that I just went through and I ended up buying what I thought was the best of the bunch based on my analysis at the time. But then to say I physically remember the specifics of each and every one, I can't tell you that. All I can tell you is those names I mentioned came out at the top of the list.
Yeah, well, you mentioned a lot of the largest silver companies there, and I have to correct myself. You mentioned Fresnillo. That is the largest silver producer in the world. I said it was Pan American. I believe Pan American's number two. But yeah, you got some great names there. So where do you see the price of silver going?
I
When
think
I
it
continue,
continued.
like 10 years, when
Yeah,
TD
you're putting me on the spot. I mean, I think it continues higher for the supply and demand, and I think it's also heavily influenced by gold. One of the things we do have in the demand, when I say industrial demand, part of that is not really industrial demand; it's investor demand, and the estimate from the Silver Institute is that 200 million ounces will be bought by investors this year. I think that's going to prove to be a big underestimate. Because if you think about it, 200 million ounces and take the population of this planet, which is 9 billion people roughly, and divide and take that 200 million ounces, that means only 1 in 45 people will get 1 ounce. And I think more than 1 in 45 people are going to be making their first silver purchase this year. And I don't think all of them will be buying just 1 ounce. I think some of them will be buying 10 ounces or 100 ounces or 1,000 ounces. So the assumption that only 1 ounce will be bought by every 45 people on the planet for investment purposes seems to me to be an underestimate in the current environment when the silver price is rising and people are starting to notice it because people when something is moving in price, they tend to hear about it. They've got a friend who says, "Hey, I made some money on silver," and they talk about it, and then they say, "Oh, I'll buy a silver coin. I want to be like you." we all want to be part of a clique. If you go to a particular church, your friend goes to a church, you might want to go to the same church. If your friend's a member of a club, a Keep Fit club, you join the Keep Fit club. If your friend buys some silver coins, you might buy some silver coins. It's a way of making that connection. So I think that because people will be talking about their silver purchases, I think it will bring in a lot of people to buy their first silver coins this year. And I think that 200 million is going to be a big underestimate. And to put that in context, I think it's the annual production of silver is about 800 million ounces a year. So it's maybe 900 million ounces a year. It wouldn't take much if we buy 1 ounce for every 22 and a half people instead of every 45 people. That would take it would be half of the global mine supply going into investment pots.
Yeah, like these silver stocks, under the right environment, they can just explode to the upside. Like we really haven't seen anything yet. And, to your point, it's a lot cheaper to buy, spend $50 on an ounce of silver versus $4,000 on an ounce of gold. So they can really take off.
Yeah, I
I
mean, funny,
recently,
just to tell you, I bought my last coin, silver coin. I bought it just a few days ago. Now, I paid about $50, but it's more of a collector type coin. It's the 2026 lunar horse, which has come out of Australia, 1 ounce. It's a 1 ounce coin. I also bought the gold version, so that was a little bit more expensive, but about 80 times more expensive. But so I got the in Australia they produce these coins called the Lunar Collection, which is a different zodiac animal every year. So every year you get a new animal based on the zodiac calendar, and so 2026 will be the horse. So they've just brought it out, and you have to get them quickly before they're all sold out because they have limited production. So every year when the new one comes out, not only for that collection, but that's the one I could get. I rush down to the coin shop and buy the coin, and I have most of the coins going because this is on the third series, so they've been going for 12 years, followed by 12 years. Now we're in the third period of 12 years. I've got almost every one of those, at least in silver, not all of them in gold, I'm afraid. Um, and I think it's a lot of fun to collect coins, and I don't mind paying a little bit over the odds to get something which is part of the collection.
well, your son's going to enjoy that. He's going to be very happy that you made that investment in those gold
Yeah,
coins.
and of
And
course, if you
30
buy
years
these
from now.
things, if you buy these things after 6 months have passed, they become very difficult to find. So if you've got part of the collection, you want to get the missing coin from 5 years ago or 10 years ago, it's much harder to find. So the time to get it is when they're fresh, and then from time to time you'll come across the older ones, in an auction or from a friend or something, and you can buy them, but you'll be paying more for the older ones than the new ones.
I just want to touch on or make one more point about silver. I recently interviewed somebody, Michael Oliver. I'm not sure if you're familiar with him. He's more of a technical analyst. And the way he measures this move in the silver price, he just looks at it from a historical point of view, the price of silver versus the price of gold. He says historically it's around 2%. So if gold's at $4,000, silver should historically, based on historical prices, be around $80 an ounce. So that's a significant move. And he thinks even that is still very much undervalued. So I think it's going to be an interesting year. Silver is finally waking up, which is good to see. Clive, I
Well,
want
if
to
you go
get
back
your
sorry, I was going to say, if you go back to the 1920s, it was like the ratio was like something like 19 or 20 to 1.
yeah. I want to get your view on one more point, and I'm reading a lot about tokenization, and a lot of companies or firms are trying to tokenize various assets. The CEO of Robinhood recently said that tokenization of assets and a freight is a freight train coming to major markets. And what are your views on this? And do you think it's possible to tokenize gold or silver?
Well, it already is. There's plenty of cryptos you can buy where you're able to exchange gold for the crypto, or you could exchange the crypto for gold, such as Pax Gold would be one. There's also one from um, Tether. I forgot what it's called. It may be called Tether Gold. I don't know the exact name. So there are cryptos out there which are convertible into gold and vice versa at a fixed ratio of the number of coins or crypto coins, if you like, versus an ounce of gold. Of course, you can't do it for a single ounce. You have to do it for a good delivery bar, which is probably 400 ounces. Maybe they do 100-ounce bars as well. But if you think about it, even 100-ounce bars, what's that? That's 350,000 US dollars. So it's not changing backwards and forwards from gold to crypto is not for mob and pop. But of course, if you don't, if you just want to buy the tokens, you can buy them on on many of the crypto exchanges, and you will benefit to some extent from the gold price, because if the crypto price deviates too far away from the gold price, the arbitrageurs step in and redeem the crypto for the gold, or they redeem gold for crypto, depending on which side of the which way it's gone.
I want to move on now and get your thoughts on artificial intelligence. You know a lot about this, and it's hard to believe it was just 3 years ago that OpenAI released their first version of ChatGPT to the public in November of 2022. They recently did a raise $6.6 billion, which now values that company at 500 billion, if you can believe that number, and it's still private. But what are your thoughts on AI? Like, do you think it's just another bubble waiting to burst, or is it overhyped? Is it have a lot more to go?
Well, it's going to bring huge changes to mankind in lots of different ways, just as the arrival of email, then the World Wide Web with the websites did. So it's a freight train. It is a freight train which is coming at us, and it's going to arrive very, very fast. And a large number of people are going to be impacted, some positively, probably more negatively, at least in the early stages, because they're going to lose their jobs. You know, I have a friend who lost his job probably a day or two ago. He was doing translations for a bank. So the bank would produce their documents in English, and then they need to be translated into another language. Let's call it Italian for simplicity. And every time he had a document, they would pay him $700. So he'd get maybe 4 or 5 translations a month. The bank has now decided they don't need a translator anymore because it can all be done by AI and then proofread by an Italian. They have Italian employees. It can be proofread by an Italian employee. So there's no real need to have that external translator doing the work. Of course, he'll go off and find something else to do. And I expect that he was already, having gone from manually translating the documents, he was probably already himself using I suspect. But that's just one example. But we saw the other day Novo Nordisk in Denmark announced that they're laying off 11,000 people, reducing their workforce by 10%. Now, they didn't say it's because of artificial intelligence, but I can put two and two together because a few months before that, they wrote in one of their annual reports or quarterly reports, they wrote that because of artificial intelligence, they're now saving lives faster. And why are they saving lives faster? If you read between the lines, it turns out that it used to take, let's say, 5 months to produce a report with 50 people working on a report for the Federal Drug Administration. And they were saying, now we can do it in a week with just 3 people. So they go from 50 people down to 3, and from 5 months down to a week. And that was their pitch. So because we get quicker approvals, or we can get it to the FDA quicker, we're saving lives faster thanks to artificial intelligence. Their pitch was artificial intelligence is saving lives. Perfectly good. Now they're firing 10,000 people, 11,000 people. Well, my conclusion is whatever they say the reason is, the reality probably is that a lot of those people are surplus to requirements because they have the other nine out of 10 people who've still got their jobs. Some of that 9 out of 10 have learned to master artificial intelligence, and they no longer need an assistant. So, to give you another example, I saw somebody writing on LinkedIn just today. He's saying, if you're a chief executive and you go home before 11 o'clock at night, your competition will take you over. And there was no mention of artificial intelligence. But what I'm thinking is this guy, 2 years ago, if he would get let's say one of his heads of departments would send him a document, a 30-page document with a report, he would have to pretend to read it and craft a intelligent sounding reply, which makes it look like he actually read it. Of course, he wouldn't have had time to read it, but he would have pretended to read it, that 30-page report. Well, today, if he's doing his job right, he doesn't have to open his email because a half-page summary of what that 30-page document says should be in front of him with the specimen reply waiting for him to say go. So he's moved his time from spending maybe an hour pretending to read the document and crafting a reply to 5 minutes. So across the world, this will be happening. Though the real problem we've got, the real problem enterprises have got at the moment is there's so few people who figured out how to harness the power of AI. I mean, everyone can go to ChatGPT and say, write a reply to this letter. That's the easy stuff. But there's so many tasks which are much more complicated and harder than that. You have to know if you're doing it right. You have to know which AI to use, which task. You have to know how much it's costing per token. That's how they measure the cost. Because every AI has got different cost per token. You have to know how to frame the question. You have to know how to put the context. You have to know how to describe the audience for the AI, who is it speaking to? Is it speaking to a classroom full of kids, or is it speaking to sophisticated nuclear engineers who know what they're talking about? You have to describe how you want the output to look. Do you want it in a PDF format? Do you want it well designed? Do you want colors? Do you want it to be with short sentences? Do you want it to have headings? You have to be able to describe what you're looking for in that respect. And you have to know how to iterate, which means do you give the entire prompt 150 lines to the AI up front and say, here's 150 lines, just go and do it? Or do you say, do this bit, and then it comes back and you say, now do the next bit, and then you describe how it does the next bit, then you say, do the next bit, and you keep iterating backwards and forwards. So all of these things are skill sets which need to be understood. And then, of course, you've got to implement if you're doing it really well, you've got to be able to harness the power of Python or other programming languages to manipulate the data which is being given to you, or to manipulate the AI itself. So the number of people who can do all of these things is pretty thin on the ground. Of course, there's plenty who can, but it's just not enough for what's required by all the companies in the world who would like to press forward with AI. But they're all going hell for leather, and they're all, if you look at the advertisements, you see a lot of job advertisements for people who are called prompt engineers, and they're willing to take people who know how to say, how do I grow potatoes? Because that's the best they can get. The good ones are gone.
So there's a lot that I want to unpack there, but the first thing I should say, just because you were talking about the various prompts to use, etc., but you developed a template or a guideline for people that they can use when they use these various AI platforms. So if somebody wants to get that template, where can they go?
Well, if they contact me on LinkedIn, and it's the only place I'll reply, I'll be happy to send them a copy of the AI instruction sheet. So it's a few pages. You can spend 2 hours on it if you want, or even an hour, and you'll become, if you haven't got a lot of experience in AI, if the best you've ever done is say, write a reply to this email, you'll become, after reading that, 10 times better at harnessing and using AI. And there is in that sheet a specimen prompt which will move you from that one sentence to 15 sentences, which will give you much better, much more satisfactory results.
And Clive, you touched on the impact that AI is having on unemployment, people losing their jobs. What did you say? Novartis is laying off 11,000 people?
No, it was Novo Nordisk.
Okay. The other company I read about was Salesforce. I believe they're laying off over 1,000 people because of AI. And the large consulting firm Accenture has also announced massive layoffs associated with using AI more. I believe it was 11,000 people also. But I was recently listening to a podcast. The New York Times puts out a podcast called The Daily. They were talking about computer programming a computer science degree and how people are coming out of university with these degrees for computer programming or computer science and they can't get a job. Like, 10 years ago, 15 years ago, that was the degree to have, but now you can't get a job because they're being replaced with AI.
I mean, I am not a programmer, but I retired 3.5 years ago, and about a year ago, I saw somebody write something saying, I was something to do with investments. I must look at this using Python. I thought, that's interesting. How can Python help me look at investments? So I contacted him on LinkedIn and said, I heard you using Python to do something with investments. How does that work? He said, well, actually, Clive, I teach Python. If you want to take lessons, I'll give you lessons, paid lessons. So I paid for the lessons. I had 8 lessons and I learned Python. But as I learned Python, I learned that there's a shortcut. All you have to do is throw it into an AI like Claude. That's my preferred one. I throw it into AI like Claude and say, here's what I've written. I want you to improve it, or I want you to do this. I want you to add that. So once you've got the basic idea of what you want to do, you just say to Claude, the AI, you say, improve this or add that feature or add a box here or add to change the color or and little by little you can build some very sophisticated programs without knowing anything about programming at all. And so I've actually done that. I've written a chess program. Now, not that I know about chess, but I don't know anything about enough computing to write a chess program. I've written programs to read my email. I've written programs to analyze stocks. I've written programs to. There's one I wrote which goes and hunts through. If you put in a search term, hunts through the internet, pulls out or finds all the pages which are most likely to have the answer for what you're looking at, downloads all the pages, and then uses AI to interpret them into a single document, which is more complete than having to visit lots of different websites to get your answer. So there's many, many things you can do with the combination of programming, Python in my case, or it could be HTML or whatever, it doesn't have to be, but programming and AI, by putting those two together, you can make a lot of things without knowing anything about programming, other than how to give an instruction, really. So no wonder programmers are losing their jobs. Uh, they don't have to know anything about programming. They just have to know how to design an end product and tell the AI to do the rest.
But just to mention how frustrating that is, you go to university into a very tough program like computer science or computer engineering. You're expecting to get this good paying job when you come out, maybe in Silicon Valley or with some big tech company, and then you can't get a job. Like on this
Yeah, well,
podcast, they said the unemployment rate for people with a computer science degree is 7%. This is in the US now. And for somebody with a biology degree, it's 3%.
yeah. Well, the trouble is, this is going to come everywhere. So it doesn't matter whether if you're coming out of university and you know everything about whatever your pet subject is. The reality now is the firms which are hiring you probably don't need you because in the past they'd hire the university graduate to do some tasks, but now the man at the next layer up who's giving you those tasks won't ask the human being to do it. He's going to say to the AI, write me a report on this investment or study the impact of sugar on the blood level or whatever it is, and because we want to produce a report on it. And so why would he have a university graduate who's going to take a week to do the job and isn't going to do it as well as the AI can do in a few minutes? It makes no sense. Now, if you think about it, AI, it doesn't need a cubicle. It doesn't need a chair. It doesn't need a desk. It doesn't spend its time going to the coffee machine and chatting about last night's Netflix program. It doesn't take holidays. It doesn't have sick days. It doesn't have any kids. It's not asking for a pay rise. It's not upsetting the pretty girl in aisle number four in booth number 42. It's not causing any problems with your boss or having sick days or anything like that. AI works 24 hours a day, 7 days a week, 365 days a year if you need it. Why would you get a human to do it? You should, for social reasons, employ the human. But if you employ the human, your competitor is going to employ the AI and they'll be ahead of you. So it's coming with a vengeance.
It's going to be interesting to see how things evolve in the coming years. Well, Clive, I always enjoy these discussions, and we started this discussion by talking about Switzerland, what a beautiful country it is to visit. And I've only been there in the early fall, and so I've done lots of hiking, but I've never skied there yet. What's your favorite place to ski in Switzerland?
Well, a lot of people like Montana or Zermatt. They're very popular, or Verbier. So any of those three locations are very, very popular. They're all very heavily English speaking. I mean, not because they're full of English, but because the tourist industry is so big. Everybody in those towns will speak fluent English, more or less. And they've all got great ski slopes. I'm not much of a skier myself. I did when I was younger, but I don't these days. But my little boy, who's 8 years old, will go to one of these resorts every winter and take lessons there. But they have lovely, all of these, Crans-Montana, Verbier, and Zermatt, as examples, have lovely wide slopes, ski schools, lots and lots of choice of where you can ski. And they're naturally, compared with wherever you're coming from in the world, going to be expensive. But that's Switzerland for you. But you get what you pay for. You are getting a quality, and you're getting a level of, let's say, comfort from a safety perspective. Now, I'm not saying that other places are unsafe particularly, but in these very expensive places, they're not the sort of places where criminals can afford to stay. So you're probably not going to find your valuables stolen from your hotel or be mugged in the street or anything like that. I mean, it's unheard of, really. So if you're a person who can afford that extra cost and you're willing to pay $6 for a cup of coffee or $8 for a beer, it's a great place to go.
Well, I am definitely going to have to get there. Now, you've already told us that if somebody wants to get your information on the AI platforms and what prompts they use, et cetera, they can reach out to you on LinkedIn. Why don't you tell us about your YouTube channel?
Yeah, so I had a lot of demand from people saying I was getting questions non-stop about investing money. I've been investing in stocks now for 50 odd years, and I was kind of interested before I was even 18 years old. But I made my first investment at the age of 18, give or take, and I've been investing for 50 years, getting a lot of punches on the nose, making mistakes. And so every time I get a punch on the nose, I learn something and try not to make that mistake again. I've also learned some very interesting lessons about ways of making money. And in a way, I think the stock market now is like a tree with low-hanging fruit. You just have to pluck it, or maybe you have to know how not to pluck the bad apples. But it's there for the taking. So what I've realized is that world is awash with people who'd like to do the same thing, but they've never taught it in school. So what I've done, I've started these YouTube channels. I'm doing a lot about investments. It's all about investments, really, teaching people different things they need to know, different aspects of investing in stocks and how to make money, how to pick the best stocks, how to analyze them, and different tricks they can use. So I've done there was a video I did a couple of days ago about how to make a lot of money really fast in the stock market using it's just one technique. And I've got one coming out in the coming days, which is another way of how to make a lot of money. It's not quite so fast, but I'll give it to you in simple English so people know what's coming. But they have to watch the video to see it in full. But the trick in the one I'm going to describe is it's looking specifically at investment companies. These are companies which exist to buy lots of investments, quoted investments or unquoted, like private companies, and they trade on the stock market, but the share price is often different from the net asset value. It can be higher or it can be lower. So the first part of the trick is to identify those where the share price is a lot lower than the net asset value. But the second part of the trick is to discover those companies where there is a catalyst which will close the gap between the price you pay on the stock market and the net asset value. And in some cases, there is a catalyst. So I'll give you a very easy example everyone will understand here. You may remember the Grayscale Bitcoin Investment Trust. GBTC was the symbol. This was going back a few years ago. It was actually 2024. So in, I think it was August 2024, GBDC won a court case against the SEC, which would allow it to convert itself from an investment company into an exchange traded fund. And the shares of GBDC were trading 25% below the Bitcoin value that it held. So it had more Bitcoin, held like 1.25 Bitcoin for every share. It was, in other words, had a lot more Bitcoin than the share price reflected. So all you had to do was buy the shares of GBTC, knowing that when it was finally approved for an ETF, you would have a 25% uplift. Now that approval took 4.5 months to come from the time they won the court case to the time it was actually approved. So in 4.5 months, there was a 25% uplift. Now, in the interim period, the Bitcoin price went up. So people who actually bought on that day when I wrote about it on LinkedIn would have made 90%, 90%, and because the Bitcoin price went up and they closed the 25% discount gap. If you bought it 6 months before that, you'd have had a gap more like 35%. So that was an example where there was a specific catalyst to say that the gap, the discount will close. So with that specific example, that was one of them. But there's many other reasons why the gap will close between net asset value and the share price. Otherwise, you want the share price to go up to the net asset value. Of course, you've got market fluctuations in the meantime, so you might go up and down. But what you're looking for is this gap to get closer and closer together so that the odds are stacked on your side. So another example would be where a company is announced that it's going to go into liquidation and distribute all the proceeds back to the shareholders. And in my video, I'll be talking about two companies which are doing exactly that, where the gap is very large and the timescale is a year or two before you'll get your money. But another one I wrote about, I did a YouTube video on it 3 months ago. It was Prosus, Prosus. I said, this is, I can't remember what I put. I said, this is the number one AI company, is a $150 billion company where you're going to make or you could make a lot of money by the gap closing. And the reason the gap was closing was because the reason for the discount was a very large holding that Prosus had in a particular company called Tencent. Yet I could see by studying it that every day Prosus was selling 500,000 Tencent shares, I guess, through the stock exchange, and every day Tencent was buying 500,000 shares, buying it back its own shares stock. So, and this was going on day after day after day for months and months and months. So, but that big discount existed because Prosus had a huge holding of Tencent and people didn't want to have all their eggs in one basket. But they were rectifying the problem, and that meant that the catalyst was rectification of the over-concentration in one stock. Guess what? Anybody who went into Prosus now has probably got at least 50% profit in a couple of months.
Well, that sounds like it's going to be a very interesting video, and I will be sure to keep an eye out for it and watch your LinkedIn profile. And once again, the name of your YouTube channel is?
It's just Clive Thompson. It's got a few letters and numbers after it, which YouTube have assigned, but it's basically look up Clive Thompson, and I'm sure you're going to find me. I think I'm the only guy with that name talking about stocks.
I'm a subscriber, by the way. Well, listen, Clive, I want to thank you very much for making the time. I do appreciate all your insights.
Thank you, James, and look forward to talking with you again. And I hope your video does well. Thumbs up, and I'd also like to thank your viewers for the lovely comments they made last time I was on your show.
Yes, the last interview you and I did had 95,000 views, so hopefully we can get over 100,000 this time.
Wow, that's amazing. I don't get that sort of number. I don't quite get that number of views on my channel, but hopefully some people will now look up Clive Thompson on YouTube and start to be subscribers, and maybe I'll get up to your kind of numbers.
I'm sure they will. Once again, Clive, thank you.
Thank you very much. Bye bye now.